Hello traders, today is the 4th of July 2010. This video is about the best entry point, okay, the best entry point. How do we enter the trade, okay, for a high probability reward, okay, and also with a limited stop loss, okay. As you can see here, this is a 20 days Euro USD currency pair, and I draw a trend line here in this chart here, okay, and the trend line will be drawn as soon as we have a higher low. So the price was in a consolidation zone, and right here we have a higher low, okay. If I highlight the point that I want to show you, you will see it better here, because we have this low here, okay, and then we have right here a higher low, okay. So from this point onward, as soon as we see this resistance on this left hand side here being broken, okay, we know that the trend is now onto the upside, okay, after a higher low, okay, higher lows, and then the trend line on your left hand side is broken, you know that the uptrend has now started, okay. So after we see those these resistance levels here being broken, if you follow my cursor here, we know that our uptrend has started. And after we see the first higher low, okay, as soon as you see the first higher low, okay, you draw your trend line, okay. This is the first low, this is the second low. From this low here, we draw already our trend line, okay. Why do we have to draw the trend line? Because we want to have the best entry point in the future. So we are waiting for the price to come near our trend line in order to participate in the direction of the trend, okay. So as you can see here, when we draw this trend line here, the price was here that time, and then in the future we see that the price come near this, after this red candle come near this trend line here, people bought it. You see right here, it's like a hot spot point to buy, okay. People bought it, it went up. When you try again to approach the same trend line again, people buy again, and you send it again away here. But like I said to you, just applying the definition of the trend, of the uptrend, you will know that the price is weakening. Right here, if you look carefully here, there was this high here, you see. If I show you, there was this high here where my cursor is, and there was this higher high, but the difference between these two high is not too far. You see, the price staggered in this zone here. It's a zone, it's not a line, it's a zone. Right here, the price staggered as soon as it crossed above this first high here, it struggled, it come back in, and we know that the price is weakening here. That will be your signal to stop buying, because the price failed to display a higher high, okay. In the uptrend, the price might display a higher lows and a higher highs till the price failed to display a higher high. Right here, it failed to display a higher high. This is not a convincing higher high. After all this weak and red candle here, we know that there is a weakness in this uptrend, so we will not buy in this point here. We will just wait. It depends on our risk tolerance, or if you want to buy here, your stop loss will be very tiny. The best thing also about the best entry point is that when you are buying at the edge of the trend line, you only use a very tiny limited stop loss, okay, for a high probability trade. For those who enter here, if you follow my cursor here, those who enter here, you see, with a very limited stop loss. This is 20 days though, but with 20 days you have to put a stop loss of 150 people or something like that or more, okay. You see right here, the price just went back up, pull back again to the same trend line, is descending again up, pull back again to the same trend line here, pull back. But the problem is that people try to use the stochastic indicator without paying attention to the trend line itself. Right here, you see, the stochastic did not come to the oversold zone, you see, it didn't, okay. As you can see here, the stochastic did not come all the way to the oversold zone. And then people waiting for the stochastic to touch the oversold zone before they can buy. But the only thing the stochastic is showing us is that the price is, when the stochastic is oversold or is turning around or is giving a bullish signal, like right here is giving a bullish signal, is saying that the price has reached a support level or a trend line, okay. So as you can see, the price approach this trend line, which is a support in this uptrend, okay. That's why it turn around right here. So you don't need the stochastic to come all the way down here to confirm that. In this particular case right here, it came all the way to the oversold level, and at the same time the price touches this trend line. You see, a lot of people bought it here. They were happy to enter here, and right here it turned around because it touches our trend line, so it must turn around. Right here it touches again, even though the stochastic is near the overbought zone here. You see, the stochastic is in the overbought zone here, but still it found a support at the edge of this point, and it turned around, okay, and then it came back again, touching again, and people will be saying that the stochastic is not doing a good job, but the stochastic is doing a good job by pinpointing only the support level where the price is about to turn around in the uptrend, and by pinpointing the resistance level when the price is about to turn around in the downtrend. Okay, so this is about the best entry point. Okay, I hope you find this video also useful, that you may apply that in your trading and understand more what the stochastic itself is doing. If you do not watch our video that we titled the role of the stochastic, you may do so to understand this powerful tool. Okay, trading is not a one-way system. Okay, if you are applying one rule, it does not mean that you have to disregard completely the other rules. Okay, that's why we created a powerful tool, the TSTW24 trading system. It's a system that guides you to tell you exactly what time of the day you should enter the market, what you should do, what you shouldn't do. It's just not tell you that when this one and this one crosses and then you buy. No, it tells you exactly your attitude that you must adopt in your trading, the discipline, okay, the method that you can adopt that will allow you, the mindset that you should adopt that will allow you to achieve consistent winning trade. Okay, so if we're talking about TSTW24 trading system, it's not about a signal only, it's about a method of trading, the attitude, the discipline, what you need to do, how you should approach the trade, okay, how you should handle your trade, and everything included for you to give you the ability of the professional traders, okay, in order to avoid mistakes, because it's the mistakes that are costing people a lot of money. A lot of traders can trade perfectly, but they are making some mistake that they are not even aware of, okay, so they keep making the same mistake consistently. That's why they keep losing also consistently, or they win 1 week and the next week they give everything back, or they win 1 month and give everything back the next month, okay. But if you know the rules and the standard that you should follow, okay, you will avoid making those mistakes and keep your profit, okay. This is about the best entry point, buying at the edge of the edge of the trend line, okay. So as a day trader, okay, if you are a day trader, this is a 20-day Euro USD currency pair chart here, okay. As a day trader, when you see the price are in the uptrend, you see that, you locate now, you draw your trend line, you see it's uptrend, and you see the price approaching the trend line. In the day, as a day trader, you look for opportunity to buy on your lower time frame in order to participate in the direction of the trend, and also for swing trader, because it's the 20-day weekly daily 20 days Euro USD currency pair chart. You may also look for opportunity to participate in the direction of the trend, okay, on your daily chart, okay, when the price approaches this trend line also, because the trend line is doing a better job than the stochastic indicator, and the indicator is only helping us a bit to understand what's going on. But the price is the #1 indicator. So if you are buying at the edge or looking for opportunity to buy on your day trading, okay, at the edge of those hot spots, like I like to call it, the hot spot zone. These are the hot spot areas where people are willing to buy. Hot spot, this is the demand zone, demand hotspot, okay. This is demand hotspot, okay. So this is about the best entry point, okay. So right here, as you can see here, the stochastic is oversold. At the same time, the price display a higher low, okay. If the price display a higher low in the uptrend and the stochastic is oversold, this is a signal to buy, but the signal is not the entry point. Now we wait for the entry point, which means that this trend line here must be broken, and the trend line and the price closes above this trend line, and right here people bought it and the price went up, okay. So price display a higher low, stochastic oversold, that's a buy signal. But the signal is one thing, the entry point is another. The entry point is when the trend line is broken and then the price closes above the trend line and then it went up, okay. So this is about the best entry point. Till the next time, enjoy yourself and be very, very happy. Thank you.